Ladies and gentlemen, thank you for joining us today for the ISA's joint seminar titled Tax Regimes and the Quality of Governance, an empirical study inquiring across an inquiry across developed and developing nations. The seminar is based on a study examining the effects of taxation on the level of corruption using panel data of around 217 countries during the period of 1984 to 2023. Today, we are delighted to have with us Professor Shravani Saha, Professorial Chair of Developmental Economics, University of Lincoln, United Kingdom. And today's session will be chaired by Dr. Amitendu Palit, Senior Research Fellow and Research Lead at Institute of South Asian Studies. I would like to now invite Dr. Palit to commence the session. Thank you.
Thank you. Thank you so much for that introduction. We are very glad that we have with us Professor Shravani Saha, and she's going to speak on the subject of tax regimes and the quality of governance and empirical inquiry across developed and developing nations. Now, Shravani holds a very strong and very capable CV, and I will not go too much into that, but what I would like to mention is that she and I are kind of from for those of you who haven't already suspected it, we are kind of from the same neck of the woods. We had gone to the same university at one point of time in our lives, which seems to be a different world now. But today she is based in the UK in the Lincoln Business School. Prior to that, she spent a large part of her early career, professional career, in the Asia Pacific. She was in New Zealand, she was in Australia, and she also has been traveling back and forth between this region and the UK. So in a sense, I think she bridges the regional understanding of subjects very well, and particularly on a subject like taxes. Taxes somehow seem to have gone out of fashion when we talk about development economics, because they have come back in a different way through tariffs, but not as the way taxes should be thought of as a way of maybe improving the quality of distribution in a country, or also in terms of ensuring equality. Those subjects have not been very well illustrated in the recent literature. But I must also mention that Shravani is editing the International Journal of Finance and Economics, and that's a very reputed, peer-reviewed, strong journal for economics, applied economics, for those of you who might have seen it. And she's also has a very interesting area of expertise and interest that's on tourism. So she's an editorial board member of the Journal of Travel Research and Tourism Analysis. And I think taxes are not the only subject in which she is interested. She has a very diverse range of interests that cuts across political economy, terrorism, tourism economics, economic growth, development economics. She organizes every alternate year a very extensive and deep conference on various subjects related to development economics at Lincoln. So the next one will be coming up next year, Shravani? 27. So for those of you who might be interested in this subject, please take a look, because that's actually a conference which brings in very illustrative names in the field of development economics, including economists like Kaushik Basu and Tim Besley from various parts of the world, among others. So I think I will not spend too much of time, Shravani, on elaborating more about you and your work. I think your work speaks for itself, and we are all looking forward to listening to you. So I'm glad that we have been joined by many of our colleagues, including colleagues from outside ISA's distinguished faculty. Professor Purimal Bagh, Tilak is here today, and we also have other colleagues joining us from other places. Thank you so much for joining us. And with that, I think I'll ask you to just take over, Shravani, and maybe 35 minutes, and then we can have a conversation. Thank you. Please go ahead.
Thank you, Dr. Palit. And I'd like to thank everyone for coming here to listen my talk. And this is my second visit to this institute. Last time also I presented corruption but in different topic on growth, economic growth, political system. But looking at the title, because I'm a development economics and macroeconomics, the basic problem we see, especially after COVID, we see many countries, government, they injected money in the economy to make and recover the economy and the country. So resource constraint is a big issue coming, and this is the basic prime economic problem is resource constraint. And that is how we say developing countries. Developed countries, they have government, they have more resources to supply like different things, especially social securities. But developing countries, government, they struggle for this. And that is how in this project, that is with my colleague Abbas Gilani, and this is work in progress. So definitely I encourage you some feedback that can improve the paper. So tax, as I said, this is the basic, in most of the countries' government, this is the main source of government income. Except resource-rich countries like Middle East countries, they get income from the oil and other resources. So with this tax revenue, government can do a lot of activities like public goods and public service spending on education, health. Then government can spend on infrastructure that can help in the development, and also like social securities. That is most important thing for the developed countries. If people are not able to work or have a lot of difficulties, then they have government support as well as pension supports. But with that respect, we see that developing countries government, they have the provision, but in implementing this, that they like suffer for, or source of income is not enough to provide these services. So tax revenue generated varies greatly from the level of development. Maybe we say that developed countries that can generate income tax revenue, which is not the case in many developed and poor countries. So emphasis on this, on the developed countries perform better in terms of socio-economic indicators. We say they have high standard of living, poverty level is low, unemployment level is low. So these socio-economic indicators, developed countries perform better than developing countries. So often the question is the tax revenue. Like developed countries, they can generate tax revenue to help people, to help their citizens. And again, developing countries are lacking behind in that respect. So we can say that in that respect, developed countries like pathways for the developing and least developing countries to follow the thing in terms of, but they have a lot of struggle or challenges in that route. So in terms of tax, we know different forms of taxes are there. Overall, we say direct tax, indirect tax. Direct tax is mainly the income tax, sales tax, that is VAT in UK or GST in other countries. Other than that, capital gain tax, property tax, inheritance tax, export tax, labor tax. So different forms of taxes exist in different countries. But the question is, in different countries, they use in different way. For example, developed countries, they more rely on income tax, but developing or least developed countries, because their income threshold is not that to pay that level of tax, so they are more dependent on indirect tax. So the question is, taxation is often linked to, taxation means revenue. that is, we are more looking at the tax revenue, that is the main source of income, that is linked with economic performance. If government can generate more tax revenue, that can help in economic development, human development, governance. So lot of different things are related in terms of tax and tax revenue. So this is just a snapshot. We can see that highest level of tax in different countries in the world. So we can definitely see that is it is it no.
You'll be pointing that
Okay.
direction.
Okay, yeah,
No, just pointing in that direction.
okay. Okay. So what we can see from this diagram that developed countries, mostly Scandinavian countries, their tax level is very high. Like Japan also, their tax level is over 50%. And if we look at Singapore, their tax level is much lower in terms of 24%. Even we think about India highest tax level is very high as well. So different countries, overall, we see developed countries, their tax rate is much higher compared to the developing countries, but there is some exception in between.
That directions.
Yeah. So this diagram shows the revenue collection in terms of US dollar, that is in 2022. So again, we see that developed countries, they collect higher volume of tax income or revenue compared to the developing countries. Like US is the leading one, then China also, that because it is a total amount of tax revenue collected. And then UK, France, Italy, and other countries, if we look at the low level, in that case, mostly developing countries. So this just shows that developed countries, they collect high volume of tax compared to the developing countries. Now, the question is, we say that, okay, tax revenue or tax generation is important for government to get that revenue. But in that respect, what is the role of corruption? So most of the existing literature, they shows that due to corruption, government gets lower tax revenue because individual or business, they always try to show their income as hidden or that way. So higher the country is, more corrupt countries, government get less tax revenue. And in many cases, we have seen that it is a transfer of money from one country, like Swiss bank account. So this is a big thing everywhere in discussion. People or business, rich people, they don't put their money in their own country, keep their money, they put in different countries, Swiss bank, where there is no disclosure of account. So that is how we see that people and business, they try to skip or avoid taxes. And that is how, if a country is perceived to be more corrupt, that means government gets less tax revenue. So there are some literature here, like Azaz et al. To 2010, corruption is in tax administration links to failure in generating tax revenue in developing countries, because corruption is more in public officials. So if people can or business can bribe them to lower their tax, so that is how government get less tax revenue. Also, Bard et al. 2008, corruption generated inefficiencies that restrict or lower tax revenue. Then, for example, Tanzi et al., that is a famous paper, Johnston 99, corruption reduces tax revenue. So literature already shows that if a country is more corrupt, there is high possibility that government don't get the tax revenue or lower their tax revenue. But the other way look at, if we see that if, like I said, government try to struggle for income to help people, especially developing and poor people, whether they want to apply more tax or higher tax so that they can generate income. Like we know that Middle East Middle East countries, they don't have any tax. And that because they have a high and rich income from the oil production or exporting oil revenue. But recently, what we have seen, there is a turmoil in oil market, and they are getting country like, say, country like Nigeria, those are oil exporting countries, they are getting less revenue selling oil. So in the Middle East, there is some discussion going on if they can impose tax. And recently, we see that Qatar, they have started they will start in January 2028, the income tax, 5% income tax in that country. And obviously, there is a level like a year 109,000, 109, that 1,000 income over it, they can pay tax. But the question is, whether government want to implement tax in the country because they are not getting tax revenue from the oil. So the question is how we generate revenue. So tax is one of the way to generate revenue. So the question here is whether implementation of tax or increasing tax that can increase level of corruption or other way around. So there is no study on that. What is the impact of implementation or imposition of tax on that impact on corruption level? So say Shah et al. Study 2013, it looked at different socio-economic factors that can affect corruption. But again, the impact of tax imposition, what is the effect on tax, is there is no study in that. So that's why we want to see it is possible that higher fiscal capacity result in higher salaries and then resulting in lower level of corruption. Because why people do corruption, one of the important factor is people get very less income. So corruption gives them opportunity to get another extra income in other way, not the legal way or other way. We see that is the thing. So if like we say developed country, corruption level is there, but at level of corruption in the maybe political corruption is there, which is very difficult to find out, but administrative corruption level is very, very low. So what we say that for regular activity, doing some license or doing some visas or things, we don't need to pay tax, especially in developed countries. But this is the case in developing countries. So that is how we say developing, or in terms of corruption data, we see that developing countries, their corruption level is very high compared to developed countries. So some form of taxation are linked with higher level of corruption, while other form of, it is not that across country there are different income level, different structure. So there is a lot of variation of income taxes as well as corruption. So that is how in this study we look to see that what is the relation, whether the relation is linear or whether the relation is non-linear, or is it what type of, not only we look at aggregate level, but we also try to look at disaggregate level, like income tax or labor tax or export tax. What type of tax can benefit or help country to increase revenue as well as lowering tax. So our data is mostly the international country risk guide. So that the corruption level data, which is available from 1984. So the data is available on a annual frequency, and it is still 2023. So according to ICRG index, 0 is the most good country or least corrupt countries. 6 is the least corrupt country and 0 is the most corrupt country. But for the study, we rescale it. Higher value means higher level of corruption. Then we have the data on tax. So this is from World Bank. So tax per capita, we looked at labor tax as a percentage of commercial profit, tax on income, profit, capital gain, export tax. So based on the data, there are a lot different type of taxes is there, but based on the data availability, we have picked up this different form of dimension of taxes. So relevant control variables are taken from ICRGR index like democratic accountability, investment profile, GDP per capita, literacy. So these are the control variables. So this is just a snapshot of the data in terms of corruption in all countries. We divide it highly developed countries subsample wise, middle income countries or developing countries, and then least developed countries or least developed countries. So we can see that overall corruption score is 0 to 6, but average is all countries is 3.09. But in that respect, we see for highly developed countries, HDCs, the average is 1.697, which is much lower. If we see 6 is the highest. And for developing countries or middle income countries, this is 3.455, which is much higher, as well as least developed countries, as expected. Their corruption level is average corruption level is 3.9 or 4. But again, other thing we can see in terms of standard deviation, the variation for highly developed countries is only 1.879, but least developed countries is variation is like 9. Standard deviation is for high developed countries is 1.18. Developed countries, some countries are very good, say Germany, France, they are doing UK, they are doing good, but some countries in development world as well, Greece, Spain, Italy, they are not doing that well compared to these Scandinavian countries or other developed countries. So that is a big variation is there. But in terms of middle income or least corrupt countries, the level of corruption, not much variation is there. It is less than 1%. So this is just again snapshot for Asia and South Asia and Southeast Asian countries. So in terms of corruption level, South Asia country is 3.71 and Southeast Asia is 3.2. So if we see the average score, which is higher than, because average score for all countries, which is 3.097, but in terms of Asia and South Asian countries, their corruption level is a bit higher, overall average. So this is just the correlation matrix, and we see that most of the variables, their correlation is much lower. But definitely we know that tax revenue and real GDP, they have a high correlation. But GDP per capita is very important indicator for a country's level of development. So we have taken GDP But we have also run without GDP as well to see that robustness or consistency of the result. So this is a panel study. So it is OLS fixed effect, and we have done the Haussmann test that suggests for fixed effect. And we have done the regional dummies against the OECD, like Asia, Africa, America. So different region, we know that there is a variation of corruption. So we use these regional dummies as well as we use the development dummies. So it is against that LDCs, high developed country, how they behave compared to the least developed countries. And we also looked at nonlinear relationship and using this in terms of total sample as well as each group, subsample developed, middle income and low income countries. So this is our main model. Corruption is the dependent variable. And we take, because tax revenue is our main focus. And to control the country size, we use the tax per capita. But again, for robustness check, we use that total tax as well. The results are very similar, but we are showing this tax per capita. And the dependent other control variables are democracy, real GDP per capita, investment, literacy rate, and we have nonlinear regressions. So nonlinear regressions we have with tax per capita as well as square term of tax per capita. Again, to say that we have checked that cubic term as well, but cubic term is not giving us a significant result. So we just limit this it to square term second degree. So this is just the first table with a log tax per capita. Again, we can see that we have controlled the endogeneity also using that IV instrument fixed effect. We have, I think, life expectancy that is mostly log GDP per capita and corruption. We have this endogeneity is there. So we use that life expectancy as external instrument as well as lag instrument we have used. So the lagged linear term shows that in every model, corruption, basically imposition of tax increases level of corruption and the value is highly significant. So what we'll look at that when we see the African countries or Asian regional dummies in column 1, 2, 3, 4, I think column 5. So over there we see African countries, Asian countries, Pacific countries, North American countries. North American countries are excluding Canada, US, because they are under OECD countries, and South American countries. So compared to the OECD countries, these countries corruption level is higher, and in all cases we see that it is significant, highly significant. But interestingly, we see that according to the data, maybe we see more corruption in African countries if we look at the data, raw data. But the result shows that North American countries or Asian countries or Eastern European countries, they are more corrupt than African countries. Also, in terms of income categorization.
Sorry, did you say North America?
Yeah, North American dummy. So North American dummy is we exclude that US and Canada because they are in the OECD list.
I see.
So what happened is we see in terms of developing and highly developed countries, as expected, highly developed countries are less corrupt than middle income or low income countries, and that is highly significant. But if we look at the dummy for the middle income countries, or that is negative but not significant, so that shows that it is not much evidence to show that middle income countries are less corrupt than least developed countries. So looking at the result of regional dummy and also the income classification dummy, we see that non-linear relationship may exist. And also we have done the test for there is possibility of non-linear regression. So according to the test, we see that non-linear relationship is there. So in terms of that linear relationship, we say that tax per capita increases, imposition of tax per capita increases corruption, and results are consistent with any of that, with fixed effect, without fixed effect, control for regional dummies or development. Now, results from regional dummies, as we suggest that corruption across continent is higher when compared to the corruption OECD countries. However, magnitude of the corruption varies across continent. And from the result of a development dummy, so no evidence that corruption in developing countries is lower than corruption in less corrupt countries or low income countries. So this is just a snapshot to see that nonlinear relationship, and definitely looking at the data, raw data, we see that there is an existence of nonlinear relationship. So, but this nonlinear relationship is different in different region or in terms of different level of development. So overall, all countries, we see mostly it is falling as tax increases. We can say that people can pay bribe to the public officials so that that increases corruption. Higher the tax level people have or business have tendency to pay bribe or avoiding the tax, and that is how corruption level increases. Or it other way to see that they can distribute their funding in such a way to report that they have more income and they pay less tax. So that is how there is a possibility that if tax increases, what we are looking at, if tax increases, government can have more income or more generate more resources to pay higher salaries to the public servant, or a lot of social security activities supporting health and education, so that government higher imposition of tax or more tax revenue can reduce the level of corruption. So initially we see that it is falling down, but after certain threshold level, it started increasing. And when we look at different level for HDC, mostly we see that there is no upturn. It is mostly falling. But for middle income countries, it is more inverted shape. So initially imposition of tax that basically increases corruption level. Maybe people, as I said, people or business, they try to avoid taxes and do some corrupt activities. But after a threshold level, there is some tendency to fall that income, like corruption level. But for least developed countries or low income countries, that is more U-shaped. So initially, corruption level decreases when there is imposition of tax, but after that, it started increasing. So non-linearity is there in, so there is a variation. So not like it is a straightforward, every region they have that similar relationship. So in middle income countries, it is more inverted U, but in low income countries, it is more U-shaped. So when we looked at the data on Asia, Asian countries, South Asian countries, and Southeast Asian countries. So South Asian countries, we see that corruption and tax relationship is more towards upward rising. There is no tendency to fall. But if we see East Asian countries, there is clear inverted U-shaped relationship. And so once the amount of level of tax increases, corruption level increases, but after a threshold level, we can see that there is a sharp fall in corruption level after imposition of further taxes. So we looked at this in nonlinear term in terms of mostly the diagram shows it is a second degree polynomial, and log tax per capita, that is positive for all countries, but second term, square term, is not significant for all countries, although it is negative. But for LDCs, we see that initially it is decreases and then you increases. So U-shaped relationship is there for low income countries or least developed countries. But for middle income countries, we see that opposite as we have seen in the diagram. So initially imposition of tax increases corruption level and then after a threshold level, and these two are highly significant. But for highly developed countries, this nonlinear relationship disappeared. So mostly we see that even the linear term is negative but not significant, but we see that square term is positive. So in terms of threshold level, we see for middle income countries and least low income countries, there is between 10 to 15. It is a log value of tax is between 10 to 15. And other control variables are mostly consistent. So here nonlinear relationship exists in middle income and low income countries, but that is in different direction. For middle income countries, an increase, it is inverted U, increase in tax, increases corruption, further increase in tax, lower corruption after a threshold level. But for LDCs, it is U-shaped. Initially, corruption level decreases with an imposition tax, but after threshold level, further tax increase basically increases the corruption level. So we further, because even it is developed country, middle income country or low income countries, not all countries corruption level varies within that region as well. So every region. So our next step is to see if we divide the sample low corrupt countries and high corrupt countries and see that what is the relationship. So in this case, like all countries, low corrupt countries, we see that there is inverted relationship is there. So it is inverted U. So initially it increases for low corrupt countries and then corruption level decreases. But for high corrupt countries, this decrease in corruption or non-linear relationship is not there. And for developed countries also, we see low corrupt countries, there is nonlinear U-shaped relationship. But for high corrupt countries, the relationship is not there. And for middle income countries, again, we see for low corrupt and high corrupt country, high corrupt group, they are significant. That means we see that as inverted U is there. So initially increases and then decreases. But low corrupt countries, we don't see that amount, that nonlinear relationship exists. So overall, we can say that mostly low corrupt countries, they see that initial increase in tax basically increases corruption, but further tax increase means government generate further tax revenue, more tax revenue that can help to reduce corruption. But high corrupt countries, it is difficult that tax revenue or can pay, because high corrupt countries, their perception of corruption is very high. So in that case, tax revenue or government implementation of any goodwill work doesn't help because of that high corrupt countries. So here the relationship between tax and corruption valid if the country is low corrupt countries. Like we know that for developed countries, UK, Germany, US, their corruption level is much lower, but they collect high level of taxes as well. But in that case, increase in tax initially reduces corruption, and actually after reaching the minimum threshold, any increase in taxes increases corruption. And for middle income countries, the tax relation is inverted U, whether it is low corrupt countries or whether it is high corrupt countries. And now in the last part, what we have done is based on the different type of taxes. So total tax revenue, then tax as a percentage of GDP, export tax, income tax, labor tax. And here we see that, for example, total tax that increases corruption level. So more tax imposition is basically generate people incentive to how to avoid tax, and that basically raises corruption level. But overall, we can see that tax as a percentage of GDP, that has not much impact on corruption level. It is not that high level of tax percentage of GDP that can create or reduce corruption. But export tax, which we can see that negative effect. Mostly in that case, it is maybe next part we'll look at. Developed countries doesn't have much export tax. Yeah. Okay. So developing countries and middle income countries, they put more export tax. So export tax is basically help to generate, because they are more focused on to get economic growth. So for those, they are more specialized, those export industries. So if government get the revenue from more export revenue, then that can help. So one of the important thing we can see that export tax in developing countries and middle income countries help reducing corruption. And another important thing we see that labor tax. Labor tax is after deducted from the profit income. So more labor tax, that basically is not good for country. It increases corruption. Also, business, they get less income. So that is how we see more unemployment as well. So we looked at that in again different group of countries, say high developed countries. For high developed countries, we see that income tax is the important component that can reduce corruption compared to other taxes. But for middle income countries, as I said, export tax is an important part that can reduce corruption. And for low income countries, also like it is not significant, but it is negative. So we see not every country can impose the same level of same type of tax in their different country. They have different structure, different government like generate investment profile, or everything is different. So it is not like uniformly we say that this income tax is good for the country to generate more revenue that can increase corruption in developing and least developed countries. But we see overall labor tax is not a very good idea that government should impose that. It mostly increases corruption in every level of development. But income tax is important for high income countries, and we see that export tax is good, lowering corruption for developing and least developed countries. So we have looked at for Asia as well, and for non-linearity, we see that South Asian countries, there is non-linearity is there. So non-linearity is U-shaped, but for Southeast Asian countries, it is inverted U-shaped. So in Asian countries and South Asian countries, there are a lot of variation. Some countries, they are performing much better than, like even we say Singapore, their tax rate is very low compared to other countries. But the question is, their corruption level is lower than other countries. If we compare, say, China, that is a big country, corrupt country, their tax rate is much higher. So the question is to see that if government can generate revenue, in some way it is not like always as a tax revenue. Like I said that in Middle East countries, their revenue is mostly coming from oil or natural gas, that revenue. So if government need to be very careful about how they can generate revenue, and that can create corruption or not. So that is important thing, because there is high possibility that most developing or least developed countries, they are high perception corrupt countries. So their governance is public officials. They are always, I don't say that it is always, but there is, according to the data, it shows that there is high perception of corruption is there. So government need to be careful about what type of tax they can increase, so that it benefits people, it benefits business, but on the other hand, it can restrict or control corruption level. So overall, tax has a significant contribution to the level of corruption in a country. In some countries, we say that imposition of tax can increase corruption level, but in some countries, imposition of tax can lower corruption level by generating more tax revenue that can help government to do for their people. And different forms of taxation impact corruption through different mechanisms. So a clear corruption enhancing relationship between export tax and labor tax in developed countries, while in the labor tax shows a corruption controlling effect in middle income and least corrupt countries. So there are significant policy takeaways from this study through the examining the role of taxation on corruption. So government should not only focus on the impact of corruption on tax, we need to look at in different way as well, whether government need to think whether they can increase increase tax or lower tax to see that to control corruption level, because corruption is one of the very important bottleneck in the path of development. So mechanism through which taxation impact corruption must be explored in more further detail. Thank you. I'm in time.
Thank you so much. Yeah. Thank you so much. That was very detailed and exhaustive, and I think I'll request the people around the table to come in with their comments and thoughts. Would you like to take questions one by one, or maybe two, three questions in one go, and then
Yes.
Yeah. Okay. Yes, Tilak, please go ahead.
even with my glasses on, I couldn't see the slides properly. But my points are basically clarification type. It's a very interesting idea, though. Basic thesis seems to be that higher the tax rates, the higher the tendency for corruption, right? Correct. Okay. Now, when you say corruption, you might be using the corruption perception index, right? So actual level of corruption and the perception could be actually different. For example, in Sri Lanka, last few years, people have been talking corruption. When you say the same thing over and over again, people start to believe in it. So the actual corruption level could be actually very different from the reality. And here, corruption probably you are referring more to bribery, because corruption happens at two levels. Basically, bribery is a very common thing. The other is the commission-based corruption from state projects. You know, jack up the project value and take the legal commission, whatever, 3% or 4%, whatever. So it's a good idea if this could be. So I think you mentioned that is not covered,
Yeah.
right? Yeah. The other is that in labor economics, we talk about, when you increase the tax rate, people, you increase the labor supply and then it goes down. How could you capture that effect? The last point is that when you use tax revenue as a percent of GDP, it's a convenient measure, but as a measure of income tax rate, ideal would be to take some effective marginal tax rate. I think that could differentiate quite a bit, The other tax rates are there, but as a tax rate, effective marginal tax rate, weighted average, would be a good idea. Yep.
Thank you, Tilak. Maybe we'll collect a couple of more questions before Shravani, you answer. Yeah, anybody? Yeah.
Hey, Shabani, thanks for the very interesting talks. And I agree that tax and corruption are important for economic development. That's important issues that we all want to be better. So I think your data set is great. My question is, in your data set, are you able to know the distribution among all the tax collected? How many percent is from central government and how many percent is from local government? Right. So perhaps the data source doesn't have this, but if let's say we probably can get many countries by asking an RA to look for the source. Then if we have this like how many percent collected from central government, how many percent from local governments, then we probably can have a better understanding where the corruption happens. Because think about big countries like India, Indonesia. I bet a lot of tax are from local tax, and because central government is so far away, central bureau is so far away, so perhaps there are like a lot of rooms for people like who doesn't have the ethic to think about how to get those monies, right? While small countries may be easier to manage. So I think there will be interesting interactions, questions that you can ask, like large versus small countries, developed versus developing countries. Yeah, and perhaps we can also understand like because after collecting tax, we want to think about the use, and then how many percent of tax revenue is for local government to use to decide, and how many for central government. So we possibly can understand where did corruption happen. Is it more at the tax collection stage or the distribution stage? Yeah, right. So this is one possibility, right? Yeah, since this is still research in progress. Yes.
Thank you.
Okay. Maybe Shravani?
Yeah.
Oh, yes.
So if the corruption is happening within the government or like by the policymakers? How can it be dealt with?
Okay, thank you very much for all the comments. So first thing what I like to say that we can do a lot of things, but there is a big question of data problem because the corruption data, mostly the perception data, all data are perception data. Like the three most important sources, Transparency International, International Country Risk Guide, and World Bank governance data, and all are perception data. And the correlation between these three are very high. Initially, I think 90s, 80s, or 85, mid 80s, there was like some data availability was there for objective data or real data on corruption, but that data was stopped collecting it because it says that it doesn't show more on corruption, but rather than it is the legal system of the country that because to get actual data, you need to get caught of the corruption activities. So that is how that objective data are not more available after that. So mostly corruption as a perception data. And definitely, I'm also always like to do more work on corruption in one more rigorously. But the question is data, because data, and even we do some primary data. In that case, sometimes it happens that people will not say correctly what is the situation. That is a big limitation for corruption studies. Go on with a more thoroughly. So data availability is all countries are perception data. And second thing is definitely again the data availability. We can't see that what is the percentage, whether it is just we get the data on tax revenue. But whether it is collected from central government or state or local, that data is not available. Also, with that total revenue, is it country-wise data? Is it from income tax or it is from export tax? That figure is also not available. So there was lot of like import tax. I wanted to check import tax as well, but import tax data is not available. So whatever the data availability is there, we have a lot of limitations in that. But definitely it is very interesting question that if we see, because different country they have, like India, we have a state, we have a central and state federal system. They do have two different tax system, whether it is collected from state or it is central. If that data available, then definitely it would be more interesting to look at. And in that case also, if it is cross country study, so all countries data availability is less. Maybe if we have some group of countries more in deeper study, in that case maybe it is possible to do that and see where is the corruption is generating from. And other thing is this corruption data, mostly bureaucratic corruption, whether we see either Transparency International or whatever data, because political corruption, that is very difficult to figure out and which is difficult to capture in the data set, because international countries guide, they do the survey based on foreign investors. If they go to do a business in different country, what are the different level of bribe they need to pay to the political leaders or different organization. That is how they collect it in International Countries Guide. But if we look at Transparency International, they also look at different, say, police, health system, school, teacher or student. So in different, I think 17 or 18 They have different survey to look at and then they combine. So it is more like bureaucratic corruption. Like, as I said, in developing countries, say for everything, maybe we need to pay bribe. Say school admission, health admission, if you know the political part leader, then you can go good health treatment in good hospital, public hospital. But for developed country, that is how just for little bit things, maybe people doesn't need to pay tax bribe. So that way, we are more focused on administrative corruption. Because administrative corruption is more like paying for little thing, whether it is business license or visa or anything, that is more captured in that thing. And Tilak, I like your idea to look at marginal tax to see what is the way we can look at it. Thank you.
Thank you, Shravani. Yeah, Sandeep, quick.
Thank you very much. I had a couple of questions. One is, how do you think culture fits into all this? Because I imagine different societies have different tolerance for corruption, and also I imagine different societies have different tolerance for taxes and what they consider as acceptable taxes. And the second, it's an interesting hypothesis that the variation is happening because there's higher salaries for civil servants and things like that. But there may be another alternative explanation, because there are a lot of people who have suggested a theory of how developing countries sometimes try to mobilize their civil service by allowing corruption, right? For example, there's an argument that in China during 70s, 80s, that was the idea, that was the compact that was formed between the highest level of party and the bureaucrats, that there is a certain degree of acceptability of corruption, which is basically a rent seeking, allowing a participation in the development so that the civil service has a stake in economic development and hence has a more effective contribution to it. So have you thought about like explanations like that? Just
Thank you for your comments. Yes, in the rent-seeking literature is a very huge literature. And definitely we say that corruption is not always bad, because greasing the wheel literature as well as sand in the wheel literature. So it is straightforward. We say that, okay, if we pay to do some work and it is done, then definitely it is not bad, because it shows the ability of the person or business more efficient. The person or business is they are more pay bribe. So that is the way to judge which is more theoretically good corruption is helping growth. But it happens that when I'm paying money or bribe to do the job, but it is not done, that increases uncertainty, that increases the risk. And that is the sand in the wheel corruption literature. And also it says that even if I pay bribe once time, maybe there is a possibility that same person come back again and again to get bribe for everything. So these are the bad side of corruption. So in that case, we definitely say that corruption is not always bad. It can help the to do things job and to do the business. But for countries where high perception of corruption is there, in that case, that increases uncertainty and risk. So in that case, corruption is definitely not good for the country, for development, for growth. So in our mainly, I know that there are a lot of direction we can look at, but in this case, we are mainly focusing on just to say that as an individual, why I can be more corrupt. Definitely, it is the income. One of the thing is income. So the income in developing countries, public officials is very less, so that they cannot survive their life properly in terms of education, in terms of health, because there is not much support. Even there is provision, but not much support is there. because government doesn't have enough resources to provide that services. So that is how we are thinking. If the tax revenue can generate more income, that can increase the income level of the people, that can help provide good education and health. In that case, whether people need to do corrupt activities. So that is the just basic level. We are thinking that way and say that is it imposition of tax can help generating income and that can help country to growth by reducing corruption. But again, as we said, it is not very straightforward. And in cases, now the thing is like we checked different country, they have different level of tax. Say if some country they are, again, we are not looking at the optimum level of tax. Because in that case, like I mentioned, Scandinavian countries, their tax level is more than 50%. If someone paying 55 or 60% of tax or business, they are paying that level of tax, maybe there will be a tendency that, okay, there is some tax avoidance. So from that way, but if government is putting everything, good salary, good health, good income, education, in that case, maybe people, they don't need to do any corrupt activities to increase the risk of their life or risk of their job. So there is more deterrence activity and reduce the level of corruption.
Yeah, okay, that will be the last question, Imran. Go ahead. Take this. Okay, sure. Really wonderful presentation. And my question was something you mentioned during answering one of the earlier questions about some of the limitations about the data,
Yeah.
where you get it from and what they tell us and what they don't, and about the limitations of interpreting that data. I was curious to know sort of, I think you mentioned something about, one of the data sets is measured by using the bribes foreign investors
Yeah.
give. How transparent is that? Like, what sort of incentives do these investors have in revealing the bribes that they give? Because that's, to me, usually when you give bribes, you're kind of hush-hush about it. But if you're giving that information to data collection agencies, that's saying something. So I was just curious, what's the logic and what do you think are the limitations of that?
Yeah, no, thank you. That is an interesting question. But what happened is like international countries guide, they are basically collecting for country risk, whether country is in risk. So their thing is they survey. Now, like UK, we have that anti-corruption law is if any business in UK, they are doing business in overseas, if they are paying bribe to overseas government or political leaders, if that is caught, then their license is cancelled, even doing business in home countries. So definitely different countries, their government is trying anti-corruption laws. But for this, they survey people because why foreign investors? Because local investors, they know the local system, local culture, where to pay, where to go. But when foreign investors, they are going to a new country, and first thing is the government officials, right? Now, central or state or whatever way, government is the main protector of the foreign business. So in that case, if they want to do, the government ask for bribe or any local authority, they ask for bribe. So then it is high risk for the country. And definitely international country risk guide, they have different organization to survey this. So they question that foreign business and that is how they collect it. And definitely they have a good cooperation with Transparency International, because Transparency International, most of the country, they have their own setup there. So And this Transparency International also, they work with the local different survey agencies. So from there, they collect the survey data and they then standardize it and they produce the index.
Thank you. Thank you so much, everybody, for the questions. I'm sure, Shravani, those were useful
that-
for you. And thank you for responding to the queries patiently. I think this is a subject on which there are many elements of individual inquiry, and they will continue to remain active because you've given us the macro picture,
Yes.
which is very
Yeah,
effective.
yeah.
But I think this query that Sandeep raised about the culture also perhaps has an important institutional element to it, which is not perhaps possible to be captured quantitatively, but there might be a qualitative way of understanding this. So what I would do is that give a big hand to you, and please join me in taking us through this. We can continue the conversation. Join us in the pantry for there are tea and coffee available. So please, and whosoever wants to have a further chat with Shravani, most welcome.
Thank you, everyone. And it is, I can see that it creates interest. And because it is our macro study, lot of micro level analysis can be done. And in terms of culture, sorry, I forgot to answer that part, because culture, we have some control variables. So control variables are like definitely level of development is there, GDP, investment environment. So different country, they have different investment environment. Then we have like democracy variable. Democracy variable also says some cultural effect of the country. Education variable is there. Education is because literate people, they behave different than if a country has high literacy, they behave differently than those who have less literacy. So these are the control variables. They have captured some kind of cultural effect. Thank
There's
you.
one point that I would just like to mention, completely outside of this subject. I know that some of our younger colleagues, the RAs, they're looking for PhD opportunities and exploring options. Some of them are also trained in the UK. They have been there in SOAS and other places. If you want to check up on the latest developments, there's a lot that's happening in the world of higher education. Many things are changing this way, that way. How many doctoral students do you have, Shravani? Around 15?
Yeah, in the department, especially for economics, we have around 20 to 25.
Okay. So
Yeah.
there can't be anybody better than her holding the wealth of information at this point in time on doctoral student prospects in UK. So if you want to check out, please take the trouble of troubling her. On that note, see you soon again. Thank you, Shravani.
Thank you. Another point I like to add here, I know that people, they have a lot of interest and future postdoctoral work as well. But for going through more detailed analysis, if we get a funding or going for anything, then maybe postdoctoral position can be created, as well as we can do more detail and more intense study for any country particular in interest. So that is one of the way to look at.
Okay,
Thank
great.
you.